it's almost forcing the stock higher, and that's why it's so difficult to send down, because these funds have to buy it no matter what. And I don't know what's going to happen to Tesla. I just feel like that what's going on is very virtuous circle-like. Each person capitulates. A lot of these analysts still are not where they have to be. There'll be another round of price target boosts on Monday.
Hey, I'm Steven, and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'm sharing my thoughts and opinions and reacting to some comments from Jim Cramer and others in the mainstream finance media around Tesla stock and its insane, incredible, ridiculous run. I'll discuss why I believe Tesla stock continues to go up, and if Tesla stock can continue running even further, or whether or not it's likely that we'll see a pullback. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
If you look at Tesla too, it's been up 17% since it joined the S&P 500 in late December. And that's bucking the trend. Usually what you see when a stock joins the S&P 500, you get a big pop, especially a stock like a Tesla or Facebook, Yahoo back in the day. And then they give it back once they're in the index after the excitement is gone and it's a show me story. But not with Tesla. That hasn't been the case.
Truth be told, I think a lot of investors out there were expecting, almost certain, that Tesla stock would see a pretty significant double-digit pullback after S&P 500 addition. Of course, we haven't seen that. Rip everybody who was hoping to wait for the dip to buy after S&P inclusion. And by the way, I think there's a few factors at play here which we'll hear more about in a moment.
And I think it's really what you're seeing is investors chasing some of these stocks that have been hot. They're disruptors in their industries, and the expectation is for growth to accelerate once we get past the pandemic. And so I think that's what investors are really looking for. They like those growth and momentum trades.
I want to talk about a stock that we haven't gotten to this week, but it's been a wild week of news for Tesla, with CEO Elon Musk becoming the richest man, surpassing Jeff Bezos. And then it hit $850 for the first time since the split. It also got an upgrade from an RBC analyst who bumped his price target to $700 after being a Tesla bear. So with all of this news, what do you make of this nonstop good news for the stock?
Well, this is the nightmare that we always thought could happen with the S&P. They add it to the S&P. People get more. These index funds get more money, and they have to go buy more and more Tesla. ETFs have to buy more and more Tesla. There's just a giant short squeeze involving Tesla, where the market. We never thought that there could be a company like Tesla added to the S&P, where it's simply self-fulfilling. As it goes up, people have to buy more and buy more. And we've never seen anything like Tesla, because we've also never seen the broken nature of the S&P funds. I mean, it's almost forcing the stock higher, and that's why it's so difficult to send down, because these funds have to buy it no matter what. And I don't know what's going to happen to Tesla. I just feel like that what's going on is very virtuous circle-like. Each person capitulates. A lot of these analysts still are not where they have to be.
I have to say, it's been fun, interesting, and somewhat painful to see the Wall Street analysts upgrade after upgrade after upgrade. This week alone, Morgan Stanley close to doubled their price target to $810 per share after taking an even closer look and realizing, oh shit, yep, that's right. Like that dickhead on YouTube's been saying for over a year now, Tesla has won the decade. We think they're in the prime position to win EVs, and there's autonomy, and there's software as a service. They're going to be pretty profitable in the future. We like this stock. Won't be the last upgrade from Morgan Stanley. Mark my words. Now, it must be said, the Wall Street analysts today who still do not understand Tesla stock, who still think Tesla stock is completely overvalued, who still do not understand the company's enormous advantage in so many areas, technology, leadership, engineering, talent, etc. The Wall Street analysts who still today don't get Tesla stock, the longer they wait, The longer it takes for them to finally dig deeper, take a second look and really try to comprehend the business, the more embarrassing it's going to be when they finally come out of their bear cave, wake up and go, oh guys, you know what? This is hard to say, but yeah, we were dead fucking wrong about Tesla stock. So sorry, we're upgrading today. You should buy the stock now, even though it's like 25 times what it was when we should have understood the business a few years ago, but we didn't because we were arrogant and naive and didn't actually look deep enough before passing our judgment. Case in point, and guys, please understand, I'm not doing this to be a dickhead. I'm just trying to explain that we're going to see this exact same statement from different analysts as they slowly, one by one, start to understand Tesla. The longer it takes, the more incredibly painful and embarrassing it's going to be. Here's just one example of what you guys can look forward to over the ensuing months, hopefully not years, but maybe it will even take a few analysts that long to really get it. But anyway, let's read on. Tesla call was completely wrong, RBC says, after 1200% rally. Oh, fuck, that hurts to read. Long-term bear RBC Capital Markets upgraded its recommendation on Tesla, admitting it had misjudged the electric vehicle maker. There is no graceful way to put this other than to say we got Tesla stock completely wrong. Analyst Joseph Spack wrote in a report lifting Tesla to sector perform. The broker had maintained a sell-equivalent underperform rating since January 2019, according to data compiled by Bloomberg. During that time, the shares have surged about 1,200%, as we can see here. Oh boy. Re-evaluating his view in the spirit of New Year's resolutions, Spack said his biggest miss was underestimating Palo Alto, California-based Tesla's ability to take advantage of its stock price to raise capital and fund growth or acquisitions. Now, I just got to jump in here. Fuck off, man. This is just like trying to cover up your complete lack of understanding of the company. Tesla's ability now to raise capital? No. That is not a reason why you missed the stock. It was just a fundamental misunderstanding of the business, the technology, their lead, their advantages, their leadership, their engineering talent, their pace of innovation, their manufacturing innovation, everything like this, completely missed. Why? Oh, Tesla's an automotive company, so that's all we need to do. Just, do they look like an automotive company? Yes, okay, cool. How many cars do they sell? Right, overvalued. Yeah, don't buy this stock because they're just a car company. Duh. He also increased his 2025 delivery estimate to 1. I'm not even going to retake that, guys. You can just deal with me laughing at how fucking ridiculous this is. He also increased his 2025 delivery estimate to 1.7 million autos from 1.3 million based on capacity and market share assumptions, which appear to have been pulled out of his ass and have absolutely no reference whatsoever to Tesla's own capacity expansion, their own plans, their own goals. Yeah, nah. Who cares about Tesla? Despite the fact that we've been completely wrong about this company, totally don't understand them. Let's not pay attention to anything Tesla themselves are actually doing. Let's just overlay our own biases, our own preconceptions of what's possible and what's likely. Yeah, that's a great strategy because that's obviously worked really well so far, hasn't it, you numbnuts? Now, I hope you guys understand. I'm not trying to be rude, obnoxious, or abrasive just for its own sake. But sometimes when you want to get through to somebody who's clearly, completely dead fucking wrong, you can take one of two approaches.
Excuse me, I think you might have made a slight mistake with your calculations, maybe?
That might get through to somebody, but sometimes you just need to punch somebody square in the face and go, listen, dickhead, you are completely fucking wrong and here is why. So today we're taking the Mike Tyson approach to this absurd estimate of 1.7 million Tesla sold in 2025. Let's just go really high level here. How many factories does Tesla have currently producing vehicles? Answer, 2. Fremont, Shanghai. How many vehicles is Shanghai alone producing per month at this point in time? Answer, over 20,000. We literally know that Tesla plans to scale Shanghai alone to 1 million units per year in the near term. 1 million already, just from Shanghai. How many vehicles is Fremont capable of producing per year? Well, in excess of 500,000, okay? That's 1.5 million already from their 2 existing factories, not including any new efficiencies, any further expansion. They'll probably squeeze even more capacity out of Shanghai. Bob's your uncle. We're already at 1.7 million vehicles just from Tesla's 2 existing factories, you dumbass. Now, I don't know if this analyst has heard. I mean, maybe it's a secret in Wall Street, but Tesla's currently constructing a factory in Berlin. Ultimate capacity of that factory, 2 million vehicles per year. Tesla has also told us this. That's right, 3.7 million vehicles per year in the near term from Tesla. We already know this. But wait, there's more. You may have heard Tesla's also constructing a factory in Austin. Guess what? That's a really gigantic factory. Tesla has not told us the ultimate capacity, but I'm willing to bet it's going to be at least 2 million vehicles. Let's do some math here. 1.7 plus 2 equals 3.7 plus 2 equals 5.7 plus Tesla may in fact announce and construct at least 1 or 2 more factories between now and 2025. I'm personally estimating around 7.5 million vehicles delivered by Tesla in 2025. More than 4 times this absurd joke. It's not even an estimate of 1.7 million. It's just a joke. You can't call that an estimate. Based on the available evidence, that's not an estimate. It's a joke. Very different things. It's not even a funny joke. It's just a sad joke.
There'll be another round of price target boosts on Monday.
Jim Cramer is on the money here. The stock analysts upgrade after upgrade after upgrade on Tesla stock are going to continue to roll in consistently until practically everyone's on board and the 1 or 2 bearish analysts are complete outliers. As it stands today, I'm just going to bring up the WeBull app and have a look at the data here. Analyst price target on Tesla stock, average price target at the moment, $450 per share. Current stock price, $880. Practically double the average analyst price target at the moment. Oh yeah, don't forget your 4 free stocks with WeBull, link below. And if you're outside the US, you can still use the app for data. It is fantastic. The point is, there's going to be a heck of a lot more upgrades on Tesla stock from the Wall Street stock analysts in the coming days, weeks, and months. Count on it.
Speaking of Tesla, this thing just keeps roaring. It's the greatest umbrella for other stocks in history.
Cramer's definitely got a point here. I've referred to this in the past as the Tesla stock ripple effect. We've seen this, let's be honest, okay? There's a lot of people hoping, wishing and dreaming, or thinking the whole EV industry is going to grow enormously in the coming years. So of course, just invest in every single company, no problems. Shout out to Nicola. Shout out to everyone investing in the battery companies. Shout out to everybody that's investing in the EV makers that are IPOing through SPACs as well. I mean, you do you, whatever, not judging here, but this is exactly what Cramer's talking about. The impact of Tesla stock, the marketplace is going, oh damn, where are the other opportunities like Tesla? There's a lot of dumb money getting thrown at this, a little bit of smart money as well. Most of it's dumb money at this point in time. Again, not hating, just pointing out the facts. So Cramer really does have a point here. Tesla is lifting a lot of other companies, lifting a lot of other valuations. One great example of this is NEO stock, which practically tracked the movements of Tesla stock for a period of about 9 months in the last 12. Why? They're totally separate companies. The stock shouldn't necessarily be moving completely in line, should they? Exactly.
You could argue it went up today because still one more negative analyst finally capitulated. I'd say that this is because Tesla was recently added to the S&P 500, and there are plenty of index and index-like funds that still need to build up their positions. And as it goes higher, they got to buy more.
This is a really important point as to what could be affecting the price of Tesla stock. We'll dive more into this in just a moment.
More buyers than sellers. As Tesla goes higher, the index funds don't ring the register. They let it ride. Same goes for speculators who've fallen in love with this one. Personally, at some point, maybe take a little schnitzel, a little bit off the table, but anything else I think is pure greed. But when it comes to Tesla, the Gordon Gekko greed is good philosophy has worked better than any other philosophy I can think of.
So a couple of points there from Cramer. The first being that index funds who now own Tesla stock, S&P 500 index funds who purchase Tesla stock, are not going to be selling that stock. It's effectively out of the market now, meaning that there's less sellers of Tesla stock overall. The second point there about the greed is good philosophy working relatively well with Tesla stock. The idea there, buy and hold, be greedy, look for those long-term profits rather than trying to lock in a short-term gain. And the third point that I want to expand on is what is driving Tesla's stock price. Cramer's really got a point here. I believe, many others as well at this point in time, that there's a huge amount of new buyers entering Tesla stock in the form of funds that try to match the performance of the S&P 500. They're looking at Tesla and thinking, damn, if we don't own Tesla, we're going to underperform. We've got to buy this stock. That awkward moment when you're buying Tesla stock for the first time at all-time highs. Now, I conjecture a lot of fund managers out there managing literally trillions of dollars worth of assets saw Tesla stock, saw the S&P inclusion announcement and thought, great, stocks always dip after they join the S&P index, so we'll wait for Tesla stock to dip after it joins the index and then begin buying our positions up so we can track the index, buy it a little bit cheaper than they have to, winning, winning, winning. Meanwhile, Tesla stock is up about 25% since joining the S&P 500. Now, I don't think this is as simple as it seems. I have a funny feeling that what's going on here is a combination of things. One, the sheer dollar amount of Tesla stock needing to be purchased is unprecedented. It's never happened before. So there's a huge amount of buying activity in terms of dollar amount on Tesla stock. The second piece of the puzzle, which is also critically important, is a number of Tesla shareholders like myself who believe the company in the future is going to be worth a shit ton, that's a technical term for slightly more than it is today. Therefore, selling Tesla stock would be kind of moronic. Therefore, I don't want to be a moron, therefore not selling a single share of Tesla stock this decade. Now, this doesn't represent every single owner of Tesla stock, but I do think that in terms of Tesla stock compared to other stocks in the marketplace, there is a disproportionately high number of investors who are holding that stock long term and will not sell a single share, further reducing the supply. And compounding this even further, in my opinion, a number of investors now who've heard about Tesla stock's incredible run or Tesla's S&P 500 inclusion are now taking a second look at the company, digging a little bit deeper, realizing there's enormous potential, and then buying Tesla stock. And finally, on top of all of that, there's a number of analysts who are finally waking up. As I predicted over a year ago, I told you guys this would happen slowly. One analyst gets it, then the next, then the next, then the next, upgrade after upgrade. This is playing out now. That alone is also adding further impact and causing even more people to buy Tesla stock. We just have the perfect storm for Tesla stock to continue climbing. Now, please don't take this as a prediction. Again, I want to really emphasize, literally anything can happen in the stock market. Tesla stock could literally do anything. But I will tell you guys, if Tesla stock runs all the way through 1,000 and to a $1 trillion market cap, I actually won't be surprised. Again, not a prediction, not what I expect to happen. But if we see that, if we just see continued buying and buying and buying and Tesla stock just keeps climbing until it hits that $1 trillion market cap, a little over $1,000 per share, I actually won't be surprised. Let me know in the comments below, guys, when do you think Tesla will first hit $1,000 per share? You guys will have heard me say many times in the past, I don't have a crystal ball, despite some of my past predictions suggesting otherwise. But I do have a funny feeling. I think, and I know I don't have proof about this, I could completely be wrong, but I think the Tesla stock is unlikely to see the kind of dips and pullbacks that we've been used to in the recent years. Why is that? Far less supply and far more people actually understanding the business and knowing that we're in the first innings. It's still early in Tesla's long-term growth trajectory. Therefore, why would you be that guy or girl that sells Tesla stock in 2021 when you could still own that stock in 2030? The one thing I can be absolutely certain about regarding Tesla stock in the future, if you're watching this and you plan to buy some shares of Tesla, you definitely won't be purchasing them from me. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.